Checkout shares of Twitter topping the tape today. The social stock soaring more than 6% on an upgrade from Pivotal Research, which says Twitter could run another 40% higher from here. Guy, your take on this call?
Well, I love the fact that their price target is $59.75, which I find fascinating for a number of different reasons. So, I don't know if it's going there, but I know. First of all, I know Dan Nathan power pitched this sucker. I think when it was trading around 32. And we've been, across the board, been very bullish on Twitter. And you've had sort of back and fills along the way. But you go back to the last quarter. I mean, I hate the metric, but daily active users was up 8%. I mean, you have all good things happening. And they say they might be able to monetize better based on the 2021 Olympics. That remains to be seen. Again, Twitter's given you every opportunity to buy the stock and stay with it. It looks great on a chart, and I think it's going to continue to grind higher. So good for them. They're probably late to the dance, but at least they're at the dance.
I'm sure there's deep fundamental analysis and a huge model supporting that 58.75 price target level. Tim, I don't know what your model might say about that.
Well, I think it's a multiple of revenues, which is maybe what you have to do. Although I think Twitter has shown that they have been growing EBITDA, and some of their usage and their engagement numbers are on. But Pivotal is talking about not just the Olympics, but they're talking about their direct response business. They're talking about a nascent subscription business, and these are things that we've been waiting on for a long time. I'm long the stock. The best thing about it to me is the chart, and the chart is that you're getting back to those June 2018 levels where it had consolidated, and again, nothing trades in a straight line these days, but Twitter always runs with a beta of 2 to 3, and so if you look at that consolidation over the last couple of years, this looks like the level it's been building to break out from, and I think that's something that this note at least is building on some of the good news there.
All right, well, we're following a developing story that could spell trouble for the tech trade, including Twitter. President Trump continuing his push to crack down on big tech in a meeting with Republican state attorneys general today. Elon Moy's got the details. Elon.
Melissa, I spoke with the head of the Republican AGs, Jeff Landry of Louisiana, after he got out of that meeting with the president, and he told me he is 100% behind the DOJ if and when it decides to sue Google over antitrust violations.
I can tell you that we absolutely will be joining the U.S. Department of Justice if or when they take that action. Louisiana will be there.
Now, Landry also warned that any potential DOJ action wouldn't stop the states from potentially filing their own antitrust lawsuit. He called out specifically Google's acquisition of DoubleClick as a red flag and said that Facebook has been predatory. Now, that meeting at the White House was ostensibly about a separate but related issue of trying to rein in the tech industry's liability protections. Attorney General William Barr said that companies have become emboldened by their sheer size.
These platforms can abuse those positions of trust, whether by deciding which voices they're going to amplify. The increased size and power of these entities really exacerbates those concerns.
Now, the DOJ has sent draft legislation to Congress on what's known as Section 230. But so far, guys, it does seem that there are no Democrats who support this. Melissa.
All right, Elon, thank you. Elon Moy. So potentially this sector faces two separate issues, antitrust concerns, but also efforts to curb the protections afforded to them by Section 230 of the FCC. Karen, are these, I feel like these threats have been around forever, and nothing's really hit the stocks.
Right. I mean, we saw GDPR and, a couple of years ago, and the resolution always ends up being a positive, and the announcement of the action itself or the threat of it is what weighs on the stock. I feel like they've been under this cloud for a long time, and I think that, if we see a Biden victory, then I think the boiling of this, this is like front and center right now. I think that will recede. And I think I know it's somewhat bipartisan, but it's not a burning issue for the Democrats like it is for the Trump administration. So that could happen. And I think, bad news is already priced in.
Yeah. Steve, you agree with that the take on Biden being a friendlier administration to tech?
No, because if you go back and replay the debates, we had Elizabeth Warren, we had Kamala Harris. Not so much Joe Biden, but I don't think he was asked to weigh in. They would like to break up the large cap tech companies. So there's going to be a real push. I do believe it is bipartisan, and I don't think the foot is going to be pulled off the gas the more the Democrats get pulled left and start listening to Elizabeth Warren or even Kamala Harris as the VP. So I don't think there is an easier path for tech going forward.